Hello, and welcome to the Freight FA Brief. Something quietly happened on May 4th, and I'm not sure it captured everyone's attention. I'll give you a clue. This company has 80,000 trailers, 24,000 intermodal containers, over 100 aircraft, and a dense fulfillment footprint. Now, if you guessed Amazon, you'd be correct. But did you know that they launched Amazon Supply Chain Services, opening the doors to its expansive logistics network? And if you don't think this is a big deal, then you're not really paying attention, because UPS and FedEx stocks dropped approximately 10% upon that announcement. So let's dive in deeper. On May 4th, Amazon announced Amazon Supply Chain Services, a program that opens its full portfolio of freight, warehousing, and parcel capabilities to any business. And this isn't just Amazon sellers. We're talking about retailers, manufacturers, healthcare, automotive supplies, just about anything you can think of. If you ship product, you can now rent Amazon's supply chain. So this isn't FBA or fulfillment by Amazon. This is something different. It's a unified service layer that includes inbound freight by ocean, air, truck, and rail, regional distribution and bulk storage, omni-channel fulfillment, and that familiar Amazon last mile, 7 days a week. Analysts described it as letting businesses buy Amazon's entire freight and distribution as a package. So that's really the AWS blueprint, line for line. The market reaction was immediate. CNBC and Reuters both reported that UPS and FedEx stocks sank around 10%. Once investors realized that Amazon wasn't just dabbling in logistics, it's actually coming for high margin B2B. And this is because investors can understand that if you can monetize your infrastructure that you've already built for yourself, your marginal economics get very interesting really quickly. So I want to talk about why this is another AWS moment. If you don't know what AWS is, it's Amazon Web Services. Chances are a website that you visit today or an app that you're using utilizes AWS. But it didn't start that way. You see, back in 2006, AWS started as Amazon's internal plumbing, servers, storage, networking, all the unglamorous stuff that kept Amazon.com working. Then they realized something. We're really good at this, and the rest of the world is terrible at it. So they turned that internal cost center into an external platform. It's the same infrastructure, just productized. Incumbents laughed until they didn't. When you turn your attention to Amazon Supply Chain Services, it's essentially the same template. Amazon has spent well over a decade building a world-class logistics network. It quietly started offering pieces of that to third-party sellers. Now it's stitching those pieces into a coherent supply chain cloud for everyone. When you think of blue chip names like Procter & Gamble and 3M, it's important to know that they are already customers. That's not me speaking. That was in the press release. Those companies don't roll the dice on logistics vendors. They move when the economics are obvious. So when people say, that this may be overblown and it's just repackaging existing services, they're technically right, but they're strategically wrong. You see, I think repackaging is the point. AWS didn't invent servers. It abstracted the pain away. And Amazon Supply Chain Services isn't inventing new trucks and warehouses. It's abstracting the pain of running a fragmented, multi-carrier, multi-3PL network. And when you abstract pain in logistics, you also abstract away someone else's margin. So let's take a quick break to talk about Freight FA and Freight GPT. Because if we're going to talk about Amazon resetting the logistics game, we should talk about how you actually play it intelligently. So listen, this episode is brought to you by Freight FA and Freight GPT, our AI freight advisor. So here's the reality. When Amazon publishes a door-to-door rate, that becomes an anchor in every negotiation. And shippers are going to benchmark you against it. And that's whether you like it or not. With Freight FA and Freight GPT, you can estimate multi-mode rates in seconds. You can stress test your pricing. You can build carrier-ready RFPs. Plus, you get an AI advisor that speaks freight, not a generic AI. We've trained and powered Freight GPT with real industrial data. So the answers actually map to how the industry prices risk and capacity. If you're a shipper, it helps you walk into every Amazon or UPS or carrier conversation knowing your true floor cost. If you're a carrier or a broker, it helps you identify lanes where you can still win on price, and service lanes, and the lanes where partnering with a platform like Amazon Supply Chain Solutions might make more sense than trying to fight it. So here's the bottom line. Don't guess your way through the Amazon driven market. Check out Freight GPT and Freight FA at freightfa.com. That's freightfa.com. All right, let's transition back to Amazon supply chain solutions. And I want to be blunt here. Not everyone is equally exposed. Parcel carriers are right in the blast radius. Amazon offers 2 to 5 day shipping with 7 day delivery in exactly the zones that fatten UPS and FedEx's margins. And those are crown jewel B2B and B2C lanes. I think 3PLs and brokers are in a tougher spot than most would want to admit. Because you see, most of the value proposition they offer is we coordinate multiple modes and carriers and give you a dashboard. But Amazon just walked into the living room with global scale and a brand that CFOs actually know and trust. And that doesn't kill good 3PLs, but it does mean that relationship plus Microsoft Excel is dead as a strategy. Air cargo and intermodal sit in a different kind of risk category. Amazon isn't trying to take over airlines and class 1 balance sheets. It's simply trying to become the most important customer in the room. With 24,000 containers and 100 aircraft, Amazon's share of freight on those networks will grow. And so does its leverage on those rates, along with service commitments. It's the same pattern as the cloud. AWS didn't make Cisco or Intel disappear. It just dictated the terms of engagement upstream. And lastly, truckloads. If you're running generic dry van on lanes that Amazon cares about, you may be in trouble. You will feel this, maybe not tomorrow, but as Amazon supply chain scales, spot and contract dynamics on overlapping lanes are going to start to look a little different. The carriers with the most defensible positions will be those that either bring density, specialization, or high quality data to the table, not just steal. So if you're listening to this, here's 3 practical moves you can do now. 1, you can re-benchmark your network. Don't wait for Amazon to show up in your customer's board deck. Use tools like Freight FA and Freight GPT to help speed the process. 2, decide where you can compete and maybe where you can collaborate. You don't have to beat Amazon everywhere. Pick the lanes, verticals, or services where you really have an edge and can compete. These are things like specialized equipment, regulatory depth, and tight service windows. 3, treat data as infrastructure, not as a quarterly project. Amazon wins because they see their own network in terrifying detail. They're looking at cost, performance, failure points. So what this means is if you're bidding and pricing based on gut feel, you're playing a different sport. There's definitely levels to this. In closing, the launch of Amazon Supply Chain Services doesn't mean game over, but it does mean that the rules have been updated. Executives who lean into freight intelligence, honest cost benchmarking, and deliberate partnerships are going to make real money in this environment. So listen, that's it for today. If you've enjoyed this episode, make sure to share it with a colleague. You can follow us online at LinkedIn at The Freight Flow Advisor. And listen, we've attached a curated article for this podcast. So head over to substack.com and search the Freight FA Brief. And while you're there, make sure you subscribe. Lastly, you can listen to this podcast on YouTube, Apple, and Spotify. Oh yeah, and one last thing. We're now on Facebook, so make sure you follow us there at the Freight Flow Advisor. Until next time, this has been your Freight Flow Advisor Brief.